Okay, we're on. Okay. All right. We have another show today. I'm going to wait a few seconds just for people to come in and join us. We just started. It's a beautiful California day. April, what the heck is the date today? I don't even know the date today. Today is
21st.
Monday
The
the
21st.
21st. Hey, I knew I had a great guest who's going to take care of me because I'm feeling lazy today. I have a guest. I'm going to introduce him to you in a few minutes or a few seconds. But before I get started, I want to welcome you. My name is Mike Patel. Welcome to my channel, Home Savvy Central. We talk about homeowners and home sellers, trends, issues, what's happening, the market updates. But today we have an interesting topic, and funny, we're going to talk about interest rate because something happened today. A major thing happened today, and we'll talk about that. But let's be real. Homeowners are getting squeezed from every direction. Rates are high, insurance is up, taxes are climbing at sky-high rates, and now the people in charge are acting like none of it matters. This isn't a coincidence. It feels like a setup. The average consumer, you and me, are being hit in a big way. In property taxes, in insurance, in egg prices, gas prices, tariffs, everything. But we're going to focus on interest rate. What impact will the interest rates have, whether it goes up or down, on you, the homeowner, the home seller, or even if you're a buyer, because you may be thinking about selling and buying a house into a bigger home or a smaller home or a house near your grandpa or your house near your kids. Whatever the reason is, we want to talk about the impact. And to talk about that, I brought in an expert, my good friend and a lender for a long time, Sumir Desai. He's in Placentia. He's with US Bank. He's been a guest before. Sumir, take a few seconds and introduce yourself before we get started.
Thank you, Mike, for having me here today. Always happy to give you my input on what's happening in the market. Of course, it's on a day-to-day change. So what we talk about today can change tomorrow or a week from today. But
Yeah.
I've been in the lending space for a little over 2 decades now, enjoying what I do, helping homeowners get keys to their first property, second property, and then eventually buying more properties and creating an investment portfolio.
Right.
I'm able to help and assist clients in all 50 states, including Alaska and Hawaii.
Right.
So always great to be out there to help others and always available to have a chat.
Great. Yeah, today is a very funny day because, there was a big fiasco on the Dow Jones, and we'll talk about that. But before we get started, I just closed an escrow today, and we were talking about what happened to the interest rate and the Dow Jones hassle going on, or the tassel going on. And he asked me about, we started talking about the bond market and the treasury bill and the interest rate, how they were interconnected. I have no clue how they're connected. I do, but can you just take a basic and tell us how those are connected, and then we'll move on to what we're going to talk about.
Sure. In a layman's term,
Yeah.
it's an emotional ride.
Okay.
When stocks go up or down, go figure. Mortgage interest rates go up or down. Just on what you just mentioned today, Mike, on Monday afternoon, we got a pricing alert that interest rates deteriorated, meaning it worsened. Now, what does that really mean? It didn't go up half a point or anything. It
Mm-hmm.
went up a tad. And we're talking about an eighth of a point difference in the market rate.
Right.
Not a big difference, but it did react
Right.
to what was happening in
Mm-hmm.
the stock market.
Right. Right. Okay. Yeah. And on that point, let me share a screen and just show you what happened today. Not that they don't know, but in case they missed what happened, I want to share
Mhm.
something very quickly to what happened to the Dow Jones and why it happened. For one, the Dow Jones just today dropped. It had dropped by 1,200 to 1,300. I didn't monitor it all day, but at the end of the day, it dropped by another almost 1,000 points because of the fact that the Trump administration mentioned that they may fire, the Fed, Jerome
Sure.
Powell,
Yep.
or demanding rate drops. But, and of course, keep in mind, we're not talking from the political point of view. We're talking from the point of view of what's happening. So this is not whether you're red or blue or independent, doesn't matter. This is not a political, it's strictly business. So bear with us. But that's what we were talking about. So if you're a homeowner and if you're concerned about what happens these days, things change by the day. Those days are gone where, hey, next 30 days is going to be stable. But today, anybody can say something. Anybody can put something on a social media, whether it's from USA or China or Canada or Timbuktu, and it can affect the global market. That's where we are today. So the reason I want to bring this interest rate topic today, specifically geared towards sellers, is because um, it's really impacting more to the sellers than it did the buyers. Of course, the buyers affects very much. So tell us, how is the difference between, let's say today, we said that the stock went crashed and the rates went up. How does it affect buyers versus how does it affect sellers in two different ways, or is it the same way?
Well, like I said earlier, it's emotional, right? You know, you're selling your property to buy a larger property because your family is growing, or your in-laws are moving in, or your parents are moving in with you. So now it's what's called a step-up basis. So you're stepping up on your square footage of property. Now
Mm-hmm.
you're comfortable in your, as most consumers are in their 3%, 2.5%, even some of them are in 2% interest rates, and now they're going to go to a 6 or a 7% interest rate.
Mm-hmm.
That's a big climb in monthly payment. So
Right.
now the homeowner needs to make a decision. How important is it to move? What equity have they built in? How much will they net? And what will their payment be moving forward? Now, as we all know, nothing is, is getting cheaper, right? The cost of goods has gone up. The cost of home has gone up. Property taxes have gone up because values have gone up. And home insurance, depending on what state you're in and what county you're in, they've gone up as well.
Mm-hmm.
So we have to take all that into consideration. And then, of course, what the consumer's monthly debts are as well: revolving credit card debt, automobile, maybe personal loans, maybe they lent monies to somebody else. All these have to come into consideration, not just, oh, I'm looking at buying a home and I want to spend this much money. Well, you need to factor in what the monthly
Right.
payment is going to look like as well.
Right. Yeah. And those monthly payments have gone sky high, right? I mean,
Yeah,
significantly high.
they have
Let's take
gone
let's take
higher.
my scenario as an example. I bought my house 25 years ago, but let's say I bought my house in 2022, 2021 when the rates were down. As a
Sure.
scenario, right? I bought my house, and let's say I'm making $100,000, just as an example. So I'm making $100,000 in 2021, bought my house for $500,000, 3%, and I'm guessing, let's say my debt to income ratio at that time was 30%, right? To be qualified. Today, that same house is costing, the $500,000 house will cost about $700,000, let's say 650, right? Interest rate is 7%. Property tax is going to double, or 1.5 times the double. Insurance is
Right.
going to double.
Right.
So the question is, if I'm a seller and want to buy another one,
Yep.
talk about the debt to income ratio that has changed 5 years ago versus today when I go to qualify to buy another house.
On the average, this is a good question. I
Right.
just qualified a client this morning who is actually looking at stepping up. So it's a
Right.
good time to have this dialogue right now.
Yeah.
His debt to income ratio went up 8%. So he
So just
still
explain what
qualifies.
DTI is, just in
Oh,
case.
sorry.
Right.
Debt to income ratio, or DTI, is taking the future mortgage payment all in. So that's your principal and interest payment commitment to the bank,
Mm-hmm.
plus property taxes, plus home insurance, plus if there is any solar or mortgage insurance or association dues, which will be very common in condos and townhomes. Any revolving debt, like if you
Right.
have any revolving credit card or automobile payments, uh, excuse me, you add all that up and you divide by the client's gross income, if they're a W-2 wage earner, gross income to qualify. In this case, the client,
Mm-hmm.
husband and wife, both W-2, they love their home. They've been in their
Right.
home going on 7 years. Their family is growing. They're looking to have a larger property now, which may be their forever home. So they're stepping up. They're looking at
Mm-hmm.
selling their current home. They know what they're going to approximately net from the sale of their home, and they're going to take that full amount and put as a down payment to buy the next home. And even then,
Right.
their debt to income ratio is going to be higher than when they first qualified, 6.5, 7 years ago. Now, in their case, they still are good. You want to stay under
Mm-hmm.
50%. I mean, generally speaking, depending on what lender you talk to and broker, but generally speaking, you want to stay under 50% on your debt to income ratio or DTI to qualify. And there are some nuances to that as well. But yeah, their debt to income ratio
Yeah.
went up. They were not shocked. They knew it, but they said, "Are we still okay? Can we still qualify?" I
Right.
go, "Yes,
Right.
yes, you
Yeah.
can, because both
Right.
your income has gone up and you've kept it easy on your outgoing debt, and they're actually paying
Right.
off. Oh, I forgot to mention, they're actually paying off two large credit card bills through their net equity from the sale of their home. So that's going to
Okay.
help them as
That
well to qualify.
okay. That's a good point. So the
Yeah,
question is, hasn't the DTI in general gone up to qualify home today? In other words, if I'm earning $1, I know in LA County, 40 cents is going towards my housing. It used to be 20% way back, then it was 30%. Some cities, some states, metro areas, 50% of their check, 50 cents out of $1 they earn is going towards their housing. Isn't that ridiculous? If you have kids, mom and dad
it's
staying at your
ridiculous.
house, kids in college,
Bad.
how can they
Savings,
survive?
it's very tough right now. There's no
Right,
sugarcoating it whatsoever. I
right.
sit down with my consumers and I'll tell them, look, you can qualify based on the following. However, keep in mind, I work for a bank. The bank is going to qualify you based on your gross income. Be mindful of your net income.
Mm-hmm. Mm,
So we may
exactly.
qualify you on $10,000 a month gross income, but your take home is, take 30% just as a chop off. Your take home is 7,000. If your mortgage payment is 4,800 a month,
Yeah.
are you okay with that per month in savings?
Right.
Hence, whatever other expenses you have and going to have now that you have a home, right?
Yeah.
You're gonna have, you're gonna
Maintenance.
have, you're gonna have incidents that are gonna happen at the house, or you're gonna need repairs done. You're gonna want to do enhancements. You're gonna want to redo the kitchen, the bathroom. Maybe the kids need upgraded furniture.
Mm-hmm.
Whatever the case may be. You now are paying your own utilities. You're not
Right.
renting anymore, right?
Right.
So you're responsible for your utilities. You may have association dues. Those may go up as time goes by because HOA association insurance policies have gone up
Mm-hmm.
tremendously. The
Right.
cost of repairs on the properties have gone up, and
Right.
the end user is you and I, the
Yeah.
consumers.
Yeah. Yeah.
If your
So,
association due is 180 a month, don't be surprised it's 192 within 2 to 3 years. I mean, I'm not saying that's what's going to happen, but
or
don't
even
be shocked
400.
on
It even could double.
it.
In
Or
Florida,
it
they've
could.
doubled and tripled. Yeah.
That's right. In the state of Florida, that's
Yeah.
a big shocker right now.
Big
That's right.
shocker. They've doubled. I've seen where they've gone up to $1,000 a month, and they were paying 200 for the last 20 years. And because of that crisis, flooding and insurance, and that collapse of the building, um, it's scary right now. And that's why we're saying that if you're a seller today, thinking about moving or selling, and then moving and buying something else, you have a lot to consider. Where are you going to move? Where are the insurance rates cheaper? Where are the
Mhm.
property taxes cheaper? Where are utility bills cheaper? Because, like a lot of people from California go to Texas, right? And they say, oh, I don't have any payments. But then they find out their utility bills is sky high, because in summer, the AC is running 24/7. And in winter, because I have friends over there, and they say, oh my gosh, my gas bill is running every day, 24 hours in winter. And summertime, my AC is cranking. Because when it
That's
gets
right.
100 degrees, it's like 110 degrees, and your expense, you thought, oh, I'm not going to have any expense, and all of a sudden you have a $500 utility bill, and those are
Yeah.
unexpected costs. So if I'm a seller thinking about going to Texas or going to Montana, I have to figure that in some
Yep.
states property taxes have quadrupled,
Yeah. It's
right?
it's not a negative thing to move out of state since we're both in California, but to
Right.
your point, just do the spreadsheet. I'm a firm believer of Excel, and
Exactly.
the newer terms are pages, and I love it because it's numbers. The numbers are the reality.
Exactly. And
It all. Mhm.
especially if people are on fixed income. A lot of people who've been in the
Yes.
house maybe 10, 20 years. I've been here 25 years. I'm not on fixed income. But what if I was on fixed income? I had a medical issue. I get a $1,500 Social Security check, and I get another $1,000 or another 1,000. Let's say I get 3,000 a month today, which is nothing today. That's probably rent today. But let's
Yeah.
assume you get that. I sell my California home, for $900,000. I go to Texas and buy a brand new one.
Hmm.
I don't have a lot of expense to go with because there's other expenses that creep up: utilities,
Yeah.
HOA, property tax. Not mentioning the electricity, water. And we're not trying to be negative. We're trying to give you facts.
Yeah.
So, like you said, take out your spreadsheet, write down
Yeah.
the things plus and minus.
Yeah.
Current rate is 3%, and your maybe the next mortgage will be 7% unless you paid off cash, which a lot of the Californians are doing that. They're lucky to do that.
They're lucky to do that because of the net equity, the equity that was built into the homes,
Right,
which is great. So what do you do with that equity? You either finance it and take it out and remodel or buy more property or sell.
right.
I'll give you a great example. I just talked to them on Friday, so I can give this exact dates. February 12th, met with the Mr. and Mrs. and they want to get a home equity line of credit of about 300,000 because they just said we're done with searching in the housing market.
Hmm.
We're going to remodel our home. We're going to
Right,
invest in our home. I
right,
said, great, let's run all the numbers. Okay, then they realized, wait a minute, this is costing a lot of
right.
money.
Yeah,
What if this? What if that? Run the numbers again on 200,000, 250, 300,
right.
350. Went back and forth, went back and forth. 10 days later, I get a phone call. Samir, we saw a home. We
Hmm.
really like it. We want to put an offer on it. I go, wait. What are we doing? Oh, wait a minute. We're going to sell our home. I go, wait a minute. We were talking about refinancing it or home equity line of credit. What happened? You know what we realized? It's going to cost us more to remodel our home than it will be to sell it and buy this home that gives us everything that we're not everything, but mostly everything we're looking for. And we
Hmm.
don't have to deal with the sale and with the contractors and the what
Right.
ifs and the price went up and all that stuff. I said, okay. So they
Yep.
went from
Oh, your sound went up. Sound. Oh,
oops, sorry,
yeah. Sound has gone
getting
up.
up.
Yeah.
Is that better?
Yeah.
Checking, check 1 2, better. Sorry about that.
Got it. Yep.
To selling their property and buying another property, and we successfully closed last Tuesday, one day before their close of escrow date, Wednesday,
Right. Right.
and they were very happy with that. But
Yeah.
here's an example of someone who has so much equity in the house, and they took that money and they bought the next home.
Yeah. Did they have to? I talked to a seller today.
Hmm.
Oops, there's an echo coming. Is that my phone or?
I don't hear it.
Okay. I'm hearing myself. Okay. Hmm.
Are you still hearing yourself?
Yeah, I'm hearing. There's a delay in my
I don't hear
hearing.
it. Oh,
Okay.
okay.
What happened? Hold on. Let me see here.
Sure.
Uh, okay. Okay. Yeah, there is an echo. I just got. Let me see what I can do here. Do you have anything on your phone? A second phone?
Mm-mm. No.
All right. Yeah. Okay. Hold on. Just technical. Just 1 minute. We'll be right there.
Yeah, I didn't press anything on my end. Are you hearing an echo on my end?
No, just when I
Or
talk.
is it just okay?
Okay. Let me see.
Hmm.
Hmm. I don't want to disconnect myself. See, I can hear. Hmm.
Do you want me to disconnect and then come back
Yeah,
in?
and then connect. Let's see that.
Okay, I'm gonna try. Be right back.
Sorry, guys. We'll be right with you. Just give us a few seconds. Sumir is gonna disconnect and reconnect from his phone. So let's see what happens. In the meantime, we have the comment section. If you have any questions or comments, make a comment and I'll be glad to answer any questions. Let us know what market you're in. Let us know if you're thinking about selling or not, or why would you not sell, and what has to do with interest rates. So make a comment. I will be glad to answer those questions, and Sumir can help you answer, or I can answer. And let me add Sumer here. Okay.
Check 1 2.
Yeah, we're good.
I don't know what it was, but okay.
Okay. No worries. So
If this
what were we
happens
talking about?
again, I'll log
Yeah,
off and come back in again.
no problem. So one thing I wanted to ask you, yeah, I know where we're going. So I'm talking to a seller and he's thinking about selling. He bought his house in 1980s. It was a big, huge house, right? And we were talking to him and he never thought about his capital gains tax. I said, wait a minute. You can have a lot of capital gains tax. So your client that you were talking with, did you talk to him about the capital gains tax they have to pay? I mean,
Yep.
any home in California today, at
Yeah.
least in Orange County, is $1 million, right?
Yeah.
So,
So
and if
I
you're married, yeah,
Yeah,
go ahead.
so I did have that conversation to both the husband and wife and saying, look, I'm not a tax preparer, I'm not a financial analyst of any kind, but you're gonna net a pretty good chunk of change. You want to talk with your accountant before you move forward. They said, you know something, Samir, we thought about that already. We already did. We know we're gonna pay a fee, but in the bigger
Yep,
picture, this is what we want to do. I said, great, it's off my conscience. We already had a conversation. But yes, Mike, to your point,
right.
that's something consumers definitely need to consider. Absolutely.
So when you mentioned that spreadsheet,
Yeah.
make sure that put down capital gains tax. If you're
Yep.
single in California, I think nationwide, if you're single, you have
Yep.
up to $250,000 credit on your
Yep.
gain. If you're
That's right.
married, you have a 500 total of $500,000 credit, which means you don't pay tax on that. I'm not an
Yep.
accountant or a financial planner. Talk to your accountant, but do take into consideration because I'll give you my example. Let's say I bought my house for 250. It was
Yep.
around that way back, right? Now he's going to sell over $1 million. So if I sell, I'm going to pay a lot of gains tax even after the credit, and I'm married. So
Yep.
I may lose 80, 90, $100,000 on that. And if I was considering to use that, I'm not going to have that. So on my spreadsheet, I need that. So let's see. Our guest just went off again. He'll come back. So anyway, talking about the capital gains tax, spreadsheets are very important because you have to figure your property tax, your insurance, your HOA, your utilities, your solar if you have any solar. In California, solar is required if you buy a brand new home. So you have that to take into consideration. Capital gains tax. Also consider moving cost. When you go there, you may not want your current furniture or your current beddings. You may buy brand new ones. All those things add up, and all those things are now going to cost more. So you have to consider all the little factors because every little thing adds up. So that's what I wanted to consider. So I wanted to show you while we're waiting for Sumir to come back here. Let me see here. So let me remove, and he'll come back on stage here. Let me show you another chart while he's coming on a report from US Bank. So let me read that quickly, share that. Let's see here, stop screen. Okay, there you are again.
I
Hey,
don't
you're
know what's
back.
happening. Sorry about that.
That's okay. Yeah, just don't
I can
touch your
hear
phone
you.
or whatever.
Yeah.
Okay, okay. Yeah, we were just talking about capital gains tax and make a spreadsheet, but I want to share while you were, I told I'm going to share a screen.
Yep.
We have a comment, by the way. Let me is that no. He's asking us if Sergio is asking if will you be buying, and I'm not sure if that's my question to me or what. But I'm Sergio, I'm not going to be buying anytime soon. I will just give you an example. So while he's asking me the question, let me now share the screen. And I was going to show them the report from US Bank, which you work for, Sumir. So I just want to share this report is from US Wealth Management, US Bank, the impact of today's changing interest rates on the housing market. So it's a direct impact to the sellers.
Yep.
So what it says here, the key takeaway is existing home sales and housing starts were up in February. Higher mortgage rates continued to hamper housing market activity, which is
Mm-hmm.
still very strong in certain areas. And investor demand for REITs, which is a real estate investments trust, is slowly increasing. And we were talking about interest rates. You know, people talk about, oh, the rates are high, it's 7%, oh, it's 7.5%, 6 point, it's very high. Yeah, because they saw this in 2020 in the let's see, where are we? We are in the 20s, 22, it was down at 3% right here.
Yeah.
We are over here. So if you look at, they are higher, but if you look at the 30-year average, the rates are still low because they were average. If you look at 30-year, what is it, Sumira? If you look at a 30-year mortgage, it's about 6 or 7%. If you
Yeah.
look at the 30-year history,
Yeah, I mean, overall conforming loans, so call it, over under 800,000 plus or minus, depending on what state you're in.
okay,
You're about 7% on the rate.
right,
Anything over that, give or take, you're in the mid six to low sixes right now.
right, yeah, okay. Hey, Sergio, we saw your comment. I'll be right. I'll answer your question in a minute. Let me just finish this slide and I'll be answer your questions. So let me read further what they're saying just so that we know. February's housing market activity picked up with increase in both existing home sales and housing starts, which is brand new homes. It provided an encouraging signal to what has been a long struggling housing market. I didn't know that we had a long struggling housing market, but here, that's what they're saying. Before
Nationwide,
February,
yes.
yeah, before February, weather-related issues slowed activity, says Rob Howarth, Senior Investment Strategy Director with U.S. Bank Asset Management. Yet existing home inventories remain low, keeping home sales numbers down. Average 30-year mortgage rates drifted modestly lower in recent weeks, but remain well above early 2022 levels.
Yep.
That's what we just discussed about. They're
Yep.
yes, they're higher, but if you look at the average, I think I saw a chart a few weeks ago. The average 30-year history in the last 30 years was 6.72% average. It was as high as 18% in the 80s, as low as 2.5 in the 2021s or 22s. But
Yep.
average is around 6 or 7%. I mean, what's
Yep.
your take on that, Samir?
Oh, I agree. I mean, the conversation always goes back to talking to my dad when he bought his first home in the early 70s. And he goes, "Let me tell you something. What you guys are going through right now is nothing compared to what I was going through. 13.25%." And when his real estate agent told him the rates dropped half a point, you should lock in, he said, "Do it, make it happen right now."
Wow.
So bought his second property, ended, in the late 70s at 11.25, and he was happy. And of course, I'm sitting here today going 11.25%. You're talking double digits. I've never
Yeah.
seen a double digit in 22, 23 years of lending. But, you know, we are so spoiled in what we saw 5, 6 years ago, not 6 years
Right.
ago, 5 years ago,
Hmm.
that most of today's market of home buyers and home sellers look at that.
Right. Yeah. Yeah.
That's what they look at.
I think what's happening now is what we call, you've heard of the term golden cuffs. A lot of the sellers who have 2, 3,
Yes.
4%, which is a lot of them,
Yeah.
including myself. I have a 3% fixed, 15-year fix. I have 2 or 3 more years to pay off.
Yeah.
And I
Yeah.
thought of moving. I have a 4-bedroom, 3-bath. It's just me
Yeah.
and my wife. Kids are gone. They had their own
Yeah.
homes. I said, you know what? I should move to a single-story home. But then, why do I want to do that? Why do I want to start my new property taxes? Why do you want to
Yeah.
resettle? I remodeled my house a few years back, and I kind of like it. So I'm going to stay here and enjoy my 3%. And invest the difference into something else, which I have been doing as a leverage, buy stocks or mutual funds or whatever.
Your
Um,
payment may end up being the same on
exactly.
today's home prices and today's interest rate and today's taxes and insurance than what you have now.
Yep.
Case in point, stay put.
Exactly. I'm staying put. And you know what? I think I'm tired of moving. I don't want to move anymore. Not that I've moved a lot, but I think it's time to chill. My kids tell me, Dad, you need to chill. And one way I can chill, just stay over here. I don't want to buy new furniture. I don't want to
Right.
remodel the house again. I don't want to make new neighbors. I'm fine with what I'm at.
Yeah. You
So
know
let's
your
jump.
neighbors.
I think I know. Neighbors are so private today. The COVID has changed
True.
everything, and
True.
social media has changed everything. Your neighbors are. This is my neighbor on Facebook. Sumir Desai and this, and those are my neighbors today, right? If I want something, I put
Right.
on hey, where can I go eat on a restaurant? And I'll
Yeah.
get 20 replies. Go to Taco Bell.
Yeah.
You know,
Are you saying that it's awkward if you get a knock on the door, but if it's your Uber Eats, you're okay to open the door to them? Is that what you're
exactly.
saying?
Right. I'm looking forward to my Uber Eats guy to come by. I'm waiting for him. But neighbors, leave me alone, will you? You know. And I'm talking in general, not me in person, but the
I
general
know. I
mentality,
know.
right? I
I
mean,
know. I had
so
this conversation with my nephew last week, who's in college, and I go, "Oh yeah, have you met your neighbors? You guys hang out or do anything?" He goes, "Neighbors? I don't even talk to them." I go,
yeah.
"Funny, you don't talk to your own neighbors, who's where you're sharing a wall because it's an apartment, but
Hmm.
you'll open the door when it's your Uber Eats delivery. Go figure."
Exactly. Yeah.
Complete
Yeah.
stranger
Complete
delivering your
stranger.
food, you'll open the door to, but your neighbor who you live with 24/7, you guys don't even communicate or go out or do anything together.
Yeah, yeah. Not to mention that you paid a lot of money for the Uber Eats. You pay Sky, and then you pay him a tip, and you're happy about it. Go figure that one out. And your credit cards are full. You can barely afford my credit card, but I'm ordering Uber Eats, which I can't afford, and then I pay him a tip or her a tip. I mean, this
I think
world,
you got your topic for your next
I
podcast
think
there.
so. Yeah. Well, it's a DTI. See, that's why my DTI is low because my credit
There's your
card is
debt to
high.
income.
So in other words, like Sumir says, if you want to reduce your DTI, reduce your credit card bill, right? Or
Yeah,
pay it off.
yeah,
Okay.
yeah, yeah.
So let's talk about today's topic, and let me share. And I think this is an important topic to discuss. Let me share the screen. And Sergio, I saw your question, so I'll answer that in a minute. I'm going to share my screen again. Okay. I know it takes me a little bit of time to share screen. I need an assistant to do that. Let's see, where is it? Okay. So what happened today when I heard, and I didn't follow up too much because I was out showing and things like that, there was a mention of reducing or firing Powell or whatever. But here's the topics. This is today from Investopedia. Dow Jones today. Stocks slide as Trump criticizes Fed Chair Powell. This is just a criticism. Nothing has happened. It's just a mention. Um, Tariff concerns persist. Gold jumps to new high and dollar hits a 3-year low. Stocks tumble Monday and amid lingering concerns about President Trump's tariff policies and their potential impact on the economy, as well as growing fears about the stability of Federal Reserve leadership. Why is this so impactful? And why is the Trump administration, Sumir, trying or forcing Powell or anybody else to drop the interest rate? What's the story behind it? The true story
So
behind it.
so I don't have the magic wand on this, but
Right.
my gut feeling is it caused a scare in the market that if one man is fired, what will that do to the market? And we saw what the effect was in the
Hmm.
stock market, simply off of a headline.
Yeah.
Simply off of a headline.
Right. Yeah. Simply, this is how important what you say, what you put on social media is so impactful. It sends ripple effects globally,
Yeah,
especially like our President Trump, right? He has a
yeah,
say in everything he does. And the only thing is he's unpredictable. So we don't know what's going to happen. But when the administration says something,
yeah,
it causes fear. And I was talking to somebody else today, and what happens is when the rates go up and down, when stocks goes up and down, and when tariff, which is a big scare, I think the whole issue with all these things is tariffs. Tariffs is dangerous. It has become dangerous. And I know we were talking earlier and said that the Trump administration has backed off on tariffs, but the 10% base tariffs are still there. The
yeah,
tariffs on China are still there. The
yeah,
tariffs in Europe, which affects the aluminum and all that, is still there. But what that has done is to the consumer, like you and me, whether I'm a seller or a buyer or a lender or whatever, the fear is in me, right? The
yeah,
what we call the consumer confidence has been shattered,
yeah.
and people don't buy stuff like we were talking about. Should we talk about the story about your friend who was going on that balloon ride and not going to go because of the cost, because of consumer? Can you tell us about it?
Yeah, so audience, before we came on online here, I was having a conversation with Mike, and my family and I are looking at attending this amazing balloon fiesta that takes place in October every year in Albuquerque, New Mexico. It's been something on the radar for quite some time. And I think our family and I can actually make it happen this October. So we're looking into it. So, we're going on, we're doing everything like every other consumer does. We're going on YouTube, we're talking to others that have went. What are the pros? What are the cons? What are all the options? What's the experience all about?
Mhm.
And they have an experience that you can ride in one of the balloons. Really cool option. So YouTube did everything, and it's an expensive adventure to do. It's $625 a person to ride up in the sky for 45 minutes. Now, the whole experience is close to 3 hours. You partake in the pre, and then there's a post. I think there's a post something. Of course, videos, photos are taken. It's a memory for life. Understood. 110% get it. So now we're just doing the math. $625 per person, family of four. That's $2,500. That's a lot of money. However you slice and dice it.
Yep.
So jokingly, I was telling my wife, "Hey, are you looking at this? Are you thinking about it?" She goes, "Well, if it makes sense and it's a one-time experience, we'll look into it." I said, "Okay, we'll look into it." I logged back in today, sold out.
Oh, sold out. $600 a ticket, not counting airfares, hotels, Uber rides. So the question is, we had this conversation earlier. We were talking about that in the history. If you look at the last 30, 40-year history, the consumer debt on credit card is at its highest. It's at its peak. People are unable to pay the credit card. They're up to here, and they're still going to Mexico, going to Bahamas, going to expensive golf courses. I play golf and I try to book golf, and guess what? Down things are booked, and you got to book it a week ahead, and they're expensive. So on one end, we are hearing rates are high, credit card rates are high, what, 20, 25%, right?
Yeah.
Yet
20
people are
to 30
spending money.
percent, 20 to 30, 21 to 29% finance charge interest rates on your average credit cards right now.
Right. And yet people are charging them. In
They
fact,
are
isn't there a new
110%.
thing? Yeah. I mean, you know how you used to buy cars and pay loans? Nowadays, you can order food. It's called finance food. You buy now, pay later. You've heard about that,
Yeah.
right? That's in
Yeah.
right now. I mean,
Yeah.
why order a Taco Bell and pay $20 and then pay later? Make your own food. I mean,
You're right. You're right. But the companies have tapped into a new trend among consumers where you can have what you want today and don't worry about it, pay me back later. I'm just going to charge you a convenience fee to make that happen. I want that
yeah.
new phone, Mike. I don't care how much it is. I need that new phone. Oh, Mr. Samir, don't worry. I can get you that new phone. It's only $18 a month.
Yeah. For the
Oh,
next
okay.
20 years. For the next 20 years.
Okay. I'm okay with paying $20 a month
Yeah.
for a new device because it has all this, and this on it.
Yeah. Yeah. Yeah.
But
It's
they're
crazy
not
what's
looking
happening.
at the consumer is not looking at the total price with the finance charge, how long it'll take to pay it off. Now multiply that on multiple things. We're talking about clothing, experiences, call it this balloon fiesta experience, excursions, vacations,
Mhm.
small vacation to large. I just where did I just see this? You can rent an RV and finance it. Rent an RV
Rent and
and
finance.
finance
Oh
it.
my gosh. Yeah.
I'm sure there's some requirements. It has to be minimum 10 days, but all
Right.
these things are stirring up from companies because it's no good of keeping your 200 RVs in your lot if you can get 50% of them out on the streets.
Yeah.
Do
And people are doing it.
something do something to motivate consumers to get out of the
Right.
house.
Right. Yeah.
And summer's
It's
approaching, right?
yeah.
Summer's
Yeah.
approaching. We're
Summer's
coming up to
approaching.
May pretty soon, right? I
Well,
mean,
well, summer's approaching means one thing. I gotta buy a new swimming set, right?
how much is your
Forget
swimming suit
Christmas.
going to cost you?
Not that I'm going to go swimming. Not that I'm going to go swimming, but I'm going to buy a new swimming suit, and I'm going to go to Nordstrom, or I'm going to match a matching tan and matching makeup, and I'll
Yeah,
go to the beach one. So
that's right.
we're in a consumer shock of what's happening, and I think we're going a little bit off topic. But the bottom line is, we as consumers are overspending, and that affects
We
your
are.
potential to buy.
Yep.
Let's talk about the affordability, and then I want to address Sergio's question here.
Sure.
Why is affordability so low right now? Right? Well, several reasons. One, interest rates high, uh, property taxes are high, insurance is high, HOA is high, and home prices are high. So when you add all those together, your expense is very high, right? If the rate was 3%, I could buy a $500,000 house. But now that the interest rate is 7%, I can buy a 350 house. That's affordability. One way to reduce your affordability is cut back on your credit card, so lower your credit card bills. The
Yep.
car that you bought, a Tesla Y or Tesla X, $100,000, you could have bought a Camry or something else, and your payment would have dropped from $800 to $300.
Yeah.
That's $500 right there that can get you 1,000 more on a house. So I think we're at a stage where we need to be conscious about And I'm not trying to tell you anything or advise you anything. I'm just saying that one factor that affects your affordability is your DTI. Keep
Yep.
your expenses down, and keep your all the bills down and start saving more, because the more you put, the less expenses you have, the better house quality or the better home you can buy. And that's the whole thing, you know.
So I want to add to that. You're absolutely right. 110%, everything you just said was correct. And that's why I spin the wheels now with consumers saying, look, I know you're not looking to buy a home tomorrow. It could be 3 months, could be 9 months, could be a 1 year, 2 year, even 5 years down the line. Let's have that conversation today.
Right.
What
Yeah.
is it you're trying to do? How can I help you achieve that? And let me give you some basic pointers to think about and plan. Mr. Samir, I'm looking to buy a home, but not right now. My big expense is my car. Great. How many more years do you have to pay off your car? 3.5 more years. Wonderful. So when your car is paid off, now you'll be in a better position to purchase, because now we won't count that car payment. Or if it's less than a year, then we can have another dialogue. But my point is, less expense you have revolving will put you in a better position in having home ownership, whether if it's tomorrow, 30 days, 60 days, 90 days, 1 year from now.
Right.
And this is
Or
all
5 years. Yeah.
complimentary. We're not taking
Yeah.
an application. We're not
Yeah.
running credit. I'm just having a dialogue and use my handy dandy Excel spreadsheet, and I run the numbers. And then,
Right.
Mike, what I also do is I email it to the consumer saying, per our conversation, this is what you told me. These are some basic numbers. Of course, estimate, estimate,
Hmm.
estimate.
Hmm.
But now you have a visual idea of what you're capable of doing in the future based on the dialogue we have and based on the data you're providing to me.
Right, right, exactly. Yeah, good point. So let's go back to our question that I was going to
Yes.
ask, and Sergio asked also. So it's the same question. So
Mhm.
Sergio mentioned here that, is the Fed actually fighting inflation or just delaying the inevitable crash? Then my question was, why the Fed isn't moving faster to reduce the rate, and how are they trying to control the inflation? So it's kind of,
That's a good question. I don't have an answer. I really
yeah,
just don't.
yeah,
What I do know is, just living in Southern California, there is a shortage of homes.
exactly.
How do
Yeah.
we go into a recession if there's a shortage of homes? I don't have the answer to it. I'm just throwing the question out there. How can we go into a recession?
Well, I can
There are
answer
the
that, but or go ahead. Yeah.
Yeah, I was just gonna say the demand to buy is still very high. I was at
Especially.
open houses this weekend. I was at one home for 30 to 45 minutes, maybe. 16 families walked through in
Mhm.
45 minutes on Saturday.
Very
16.
common. Yeah. But let's look at the flip side. I was
Sure.
listening to a podcast on my way here, and the podcast was a chief economist, a big honcho. I forgot his company, multi-million dollar net worth. He said, I own several properties, including in Naples, Florida. He said that when I bought the property, I bought 3 properties. When I bought it during COVID, there were 3 on the market at that time, and he bought one, and then he bought another one, and then he bought another one, all in Naples, right? So today in his neighborhood there's 40 homes for sale. Prices have been dropping. The average price has dropped 15 to 20%. So see, if I sell today, I've lost 15% of the peak value. Then he went further. He said, guess what, it doesn't end there. 2 of his properties, the tenants haven't paid him in 6 months. They're not going to pay him in 6 months. He started evacuation, which is going to take 3, 4, 6 months to a year. Tenants are smart today. They can hang
Oh,
in there for a year,
eviction.
right?
He's going through eviction with them.
Eviction, had an attorney. So he said, I'm at a loss right now. But the point is, we talked about Florida, and I talk about Florida all the time. And I'm sorry, Florida, I bring it up all the time. But if there's a crash going to start, it's going to start in Florida. The ignition point
Yeah.
is going to be in Florida.
Yeah.
And something has already started. It may take 2 or 3 years to get there, but the ignition or the pilot has been lit.
Yeah.
Sorry to say that, but inventory is high, prices have been dropping, insurance is sky high. A lot of the fixed income families, especially seniors who have been forced to pay reassessment fees of up to 10, 20, 30,000 upfront, their HOA has jumped 3 times. They can afford the payment. They're on fixed income, and they
Yeah.
leave homes. They can't fix the damage that was done. They can't wait for the insurance companies. So this is a fact, and I'm not trying to be negative, but these are the facts. So the
Yeah.
question is, what does a seller do today? How to best utilize the interest rate? We don't know if it's going to go up or down. We don't know if there's going to be a recession. Like you
Yeah.
said, there's a big supply and demand, at least in Orange County, but there's a low demand in Florida, low demand in Texas. Some states are booming. Somebody was telling me yesterday, I did a another podcast last week, and they said that the northeastern region is booming right now, but the
Mm.
Sun Belt is suffering,
Interesting.
including Florida, Alabama, because I think what happened was for the last 4 or 5 years, everybody was going to the Sun Belt. Homes were cheaper 5 years ago.
Okay.
Today
Okay.
they're up. But guess where
Okay.
the properties are cheaper? My brother just moved to Wisconsin. So Wisconsin, of all the places, you moving from Southern California to Wisconsin, do you know what the snow rates are? I don't know. I know I'll never go there. It's freezing.
It's very high.
They're very high. And maybe that's why they're moving there. But the booming right now is the Northeast because maybe the prices are still lower. So maybe I should buy some rentals. So in 5 years, the price will be high. I'm not going to go there because I'm not going there in the wind chills over there.
I have a
You know.
realtor referral for you
Okay.
in
Yeah.
North Wisconsin if you need that.
Yeah. Okay. Yeah. Maybe in 10 years, so anyway, going back to the two questions, and I know we don't have an answer, but we can chat about it.
Yeah.
Why is the Trump administration forcing the Feds to lower the rate? And why is the Fed not lowering the rates? It has to do with inflation. And I also read a report that the Chinese people or the Chinese government are not going to be buying those treasury bills, and they're actually buying gold. And that's why gold, if you notice in the report, gold is sky high in the last month or so because China is buying a lot of gold. It has to do with the treasury bills or the money that they buy. It has to do with the loans. It all goes down to the loans that the banks are selling or they sell to Fannie Mae and Freddie Mac. So
Yeah.
there's a lot of things happening with the interest rates.
This is all in a big pot with a lot of boiling water.
Right.
And it's that's why the first thing we talked about was this. Everything we all are going through right now is a very emotional ride right now.
Right.
Strap on your seatbelt. Cash is still king. Make sure you still have money in your bank account, and try to live below your means.
So on that point, let's talk. You've heard the statement.
Marry the house.
No, the statement that the 401k.
Oh,
When the stock market went down, the 401k
Right.
is now the 201k.
Yeah.
So if I'm a senior, which I am, but if I'm a
Oh my
typical,
God, that hurt a lot of people.
so that's what I'm
lot
saying.
of
So if
people.
I'm a senior on a fixed income, right, I'm worried because my Roth IRAs, my everything's gone down. My stock portfolio is down. My 401 is down. I had this much. First of all, an average American doesn't have enough savings.
No.
But we won't even go there.
No,
But
they're
for
living
those
paycheck
that
to
have it,
paycheck. Yeah.
for those that have it, they're concerned. So if I'm thinking about selling and moving to a smaller house or a bigger house or two near my kids or near my mom and dad or near my brother or whatever, I may not be thinking about selling. And the rates has everything to do with it. And what the rates impact with inflation or if it goes up or down has everything to do with it. So how do you deal with it? That's
It's again not an easy answer. You need supplemental income. You need another job. You need to rent out a room. You need to cut back on your own expenses, especially if you're living paycheck to paycheck. And cost of goods is not going down. I don't care what anybody says anywhere. Your cost of milk is going to go up, not go down. I'm sorry.
right.
It's not going to go down, $1 in the next month.
What about the
It's just
balloon
not.
ride? What about the balloon ride? $600 this year. Is it going to be more next year or less next year?
Just for fun, I'm gonna go look up what it was last
Yeah.
year, just to get an idea.
$600 for 45-minute ride. That's crazy.
$625 for a balloon ride experience, sunrise or sunset. I gotta
Right.
tell you, the photos, the video, phenomenal.
Well, most of them are edited.
It was a wow factor. But
Most of them
my
are edited. Let
goodness.
me tell you that they're edited today. No picture on social media. You go to Facebook, look at your friend. They all edited. Click one button and it brightens up. And I'm guilty. I do that too. When I post a video, I click one button, auto edit, and it boom, my color changes.
You got a good point. Every woman's hair was perfect on that balloon ride.
Okay.
You've got a very good point there, Mike.
Exactly.
I'm gonna go back and watch him one more time.
I don't think that ride is worth $600. Maybe 500, but not 600. So. Okay, Sergio is saying that China stacking gold while we drown in mortgage-backed debt. That is a red flag wrapped in a gold bar. That's a good comment. Hey, thanks, Sergio, for that comment.
Yeah.
So
I'll have a
let's move
pint
on.
of beer with you over that.
Exactly right. So I've got a couple of more points to discuss, which are kind of important.
Yeah.
Let's go back to, we talked about it briefly, but let's go back. Said most existing homeowners are locked into the 3 or 4% rates, causing the golden handcuff syndrome,
Yeah.
which means that we talked about the shortage of supply, shortage of homes, and that's one reason. One is the high demand. The
Yeah.
second is the new home builders cannot keep up with it. But the main reason there's a shortage because homeowners like myself, we're not selling. The homes are
Yeah.
not coming on the market.
Yeah. It's a double
So
effect. Seniors, all due respect, seniors are
yeah.
not selling property because where are they going to go tomorrow? Let's just be real. And number two, I want to go buy a home. I want to go upgrade, and
Mhm.
there's not quantity wise enough
Right,
homes to go consider to purchase.
right, right.
Not
Okay,
quality, not location, quantity. And talk to any builder, they'll tell you the same thing.
right.
They're not building fast enough.
No, and they
I know
can't.
there's other things going on behind the scenes and the
Right.
why and all that stuff. In some cities they don't want more housing, and things are sort of controlled by the state government and the cities. I get all that, but just across the board, there's not enough homes being built
Hmm.
or
Right.
quick enough.
Quick enough. Right. Yeah, in certain areas, like I know for a fact that in certain areas of Dallas, Houston, Austin, there's oversupply of homes right now because the flow from California, flow from Chicago, flow from New York, going to Texas has slowed down. So there's an oversupply, but
I
that's
got
spotty.
you.
But there's a northeast region, there's a shortage. So
Hmm.
homes are selling there. So certain areas, there's a lot of oversupply of new home construction. So, like I said, market is local. So on that note, if you're watching this live or recording, make us a comment. Let us know where you are, what's happening in your area, whether you would move or not move. And
Yeah, I'd
on
like
that
to know
note,
what town some of the listeners are coming in from, because my
yeah,
perspective will be from Orange County, California.
exactly, because we
You
know
know,
that, right,
yeah,
right.
yeah.
So one thing I also want to talk about, which is important and tied to interest, not tied to it, but very popular, we touched on it, but what is going to be the impact of the tariffs overall on the housing market, let alone the interest rate in general? Coming
Sorry,
from a
something.
lender's point of view,
I
coming
got
from a
cut out a
lender's,
little bit. I'm sorry. Ask me your
uh,
question. I'm so sorry. I got cut out.
what will be the impact of tariffs on a
Mm,
typical home seller and a home
mm.
buyer, looking at a perspective from the lender side, not from a consumer side?
Um, I don't know. I mean, I just have to imagine right off the bat, just cost. Cost is gonna go. Is cost of everything is just gonna go up. So, what you anticipate, what your revolving credit card liabilities are today, increase that.
Right.
Okay, I'll give you an example. 2 weeks ago, talked to my financial advisor, and this is what he told me. What your revolving, oh, this is a good dialogue to have, or a good conversation to have. Whatever your current credit card debts are, increase it by 20%. I go,
Debt to me.
20%? I go, where do you get 20% from? He goes, he used his own mathematical numbers and calculations. But
Right.
if your revolving credit card is, say, $3,800 a month, increase that by 20%, because that's what the anticipated cost of goods are going to be to what you're going to be paying out of pocket on a monthly
So
basis.
increase the amount you can borrow, not not just charge it and increase your
Oh,
charges.
sorry. Yeah, yeah, yeah,
Okay,
yeah.
clarify that.
Sorry.
So increase the
Sorry.
amount
Yeah,
you can, the credit
yeah,
limit.
yeah,
Right.
yeah. Sorry.
Okay.
You said it better than I did, but you understand what I'm saying.
Okay. No, I thought, hey, he told me to charge. I was going to order Uber Eats and buy the balloon and fill up my credit card so I can have a better. But you made the limit. Okay.
Yeah, I meant the limit. Yeah. Don't
Okay.
order that. Don't order. Yeah, don't order that extra pie. Extra
Okay.
pizza pie.
You got it. Okay. Okay.
I know it doesn't directly answer the question for sellers or buyers, but
Right.
cash is king. I mean, just be mindful of what you have in assets.
Well, let me give you my opinion. If I'm a seller and I once thought about selling but did not sell, and part of the reason is because I got the 3% fixed for 15 years, which I got in 2016, by the way, not in 2020. I got that in 2016 with a cash out refi. It was actually 2.75% back then, but I pulled some money out. I had a lot of credit card debts. At that time, I had like 42,000 in credit card debts. I was paying 20%. I had 2 cars. I had a second loan mortgage, a HELOC. I was paying 9%. So talking to my lender, and at that time I didn't know you back then.
It's okay.
Didn't know you. So, he said, why don't you pull a line of equity, get a cash out refi. It's
Yeah.
2.75%, but pull out $50,000, pay
Yeah.
off your credit cards, pay off your cars, pay off your, actually it was 100,000 we pulled out because I had a 50,000 in HELOC.
Mhm.
And my first mortgage, second mortgage, credit card, my car payment, everything was $4,200 a month. When I did the refi, pulled out $100,000, paid off, my payments dropped to $3,000 a month.
Can't go wrong.
Can go wrong. And my mortgage was
no-brainer.
15 years. My mortgage went from 20 year remaining to 15 years.
Yeah.
So not only did I cut out 5 years of my mortgage,
Yeah.
which I did, I stopped $1,200 a month payment.
And your
And then
overall
what I did
payment is
was-
still lower. Yeah.
Yeah. And then what I did was every month since 2016, I've been paying $200, $300, $400 a month more.
Mm.
So instead of 15 years, I'm going to be paying it off. Oh, there he goes again. He got disconnected.
But
oh, there
are
you
you
go.
still there?
You got disconnected. Yeah.
Yeah,
So anyway,
sorry about
so what I was saying was not only was I saving 5 years and $1,200 a month, I'm going to save 5 more years because I'm going to pay off the mortgage in almost 10 or 11 years. So I'm saving
Gotcha.
a lot. So I saved a lot of money on paper. And I think off the topic, to make money, to become rich, you get rich on paper.
Yeah.
Not by working 9 to 5 and saving,
No.
you got to buy
No.
stocks, or you got to do an exchange,
Diversify.
or
Gotta
diversify.
diversify your assets.
Working 9 to 5,
110%.
you ain't going to get rich. You're going to get poor because, like I said, that I see in a couple of years, the debt to the banks will have to allow DTIs of 50%. Otherwise, nobody's going to be able to buy a house.
So
It went up from 20, 30% to almost 40% right now. 50% is going to become a norm.
I was gonna say it needs to go higher than that.
But then
Right
how can
now-
you make a living if I'm,
No, right now it's screaming at 50%. We need to get it to 55%. I hate to say even up to 60%.
Yeah, but if I'm paying from my dollar that I earn 60 cents towards my housing cost, what do I have
Yeah.
left?
Well,
By the time I pay diapers and
no, you're right.
gas.
Yeah. No,
Why even work?
You're right. You're right.
Remember, we were talking about how the Gen Zs and millennials are driving up the credit cards,
Yeah.
ordering food and pay later. They're
Yeah.
saying, why the heck should I save?
Yeah.
I can't buy a house. I can't pay
Yeah.
rent.
I might
my
as well just
boss-
enjoy my experiences now.
Yeah, my boss is
I don't
not
know
going
what's
to
gonna
increase
happen tomorrow. I might as well
Yeah.
just take advantage and enjoy going to Coachella and go balloon riding now. Forget
Yeah.
whatever it costs, and I'm not worried about paying it off tomorrow.
Yeah, there's a big shift happening. I mean, what's
Yeah.
happening is those who can afford homes can afford it. I mean, I've sold a lot of homes to millennials. In
Yeah.
fact, my last 3 homes that I closed are all under 45 or under 50. They got money and they bought. At the same time, there's a lot of millennials can't afford to buy,
No.
let alone whether you're married or single, they can't afford it. So there's 2 spectrums. There's nothing in between. Either you got the money to buy or you don't, and there's nothing in between. And that's what the podcaster mentioned
Yeah.
today, talking about tariffs and interest rates and what's happening as we go along. The rich are getting richer and richer by 10 times more. And the middle class is just getting, from the middle class, either you go this way to richness or you go to the credit card full category.
Yeah.
And that's
Yeah.
what's happening. It's sad. If things continue like this, I mean, of course, we're not financial planners, we're not accountants.
No.
At least I'm giving my opinion based on what I hear,
Yep.
what I talk to consumers. I'm sure Sumir is giving his stats based on what he
Yeah,
talks and reads.
I'm meeting everyone from your 24-year-old to your 82-year-old.
Right,
know.
exactly.
So different mindsets, different thought process. Well, thought processes, analogies,
Right,
the why, the how come, the should I not, and
right,
I give them the facts, I give them the numbers, let them make a decision. But if they ask me what I think, I'll tell them what I've done
right,
and what's made me and my family successful all these years.
right. So let's go back to the final thing that we're going to talk about, the final topic, which could go for a few minutes, go longer. The final topic is, we understand that the Fed is not going to drop the rate and they're going to do what they're going to do. But regardless of what they do, if I'm a homeowner, been there for 5 years, and now I want a bigger home or a smaller home and I want to move, what are some of the things as a buyer that I should do, knowing that the rates are still going to be same, they're not going to drop drastically, knowing that the home price is not going to crash, at least in the next 1 or 2 years. Because remember, we didn't talk about it, but there's still a lot of equity in the homes, but we won't talk about it. So that's why there's no immediate crash, because we got a lot of protection when it comes to equity. So if I'm going to buy in the 1 or 2 years or 3 years, as a buyer, what are some of the things I can do to make my purchase easier when it comes to qualifying or being in that home affordability? What are some things I can do looking
So
ahead?
so going back to my client that we started talking in February and we just closed escrow last week. Their thought process was to keep the house, renovate it, and then rent it out and buy a home in the future. That was their immediate thought. Then they changed scope tremendously and said, nope, we're not going to go do that. We're going to sell our home. We're going to take the net equity and we're going to go buy our next home. So number one, that could be your first thought process in the next couple of years is sit on the equity that you have right now in your house. The presumption is that equity will continue to still build in the home, in the community that you're in right now. And if you don't have an attachment to your home and you're ready to sell your property, because now it's a property, it's not your home, to buy your next property, that's option one. Option two is you can do a cash out refinance today and invest that money in the market if that makes financial sense, or get a home equity line of credit and sit on that money today, the available equity in the house, and sit on that today so you can use it on your future home purchase. That's another idea. Or number three, you keep your home to
Hmm.
rent it out because you're sitting on probably such a low interest rate as most consumers are,
Right,
and start talking to your family. Hopefully you're good with them to maybe get some gift money and maybe buy your next property and
right,
start building your wealth there.
right. Yeah, yep. Yeah, basically, cut your cost, build your equity, cut your expenses, and like you said, have a spreadsheet, whether you're going to move 6 months or 3 years, start working towards it, have a plan, you know.
If
And
you
I
don't have a
just
plan, you can't execute a plan.
you can execute a plan. Yep. And if the rates
Gotta have a
drop,
plan.
yeah, and if the rates drop significantly, and if you can afford it, from 7% to 4.5%, you
Yeah,
know, pull the trigger. And a lot of them are
yeah,
going to pull the trigger. But I wanted
yeah.
to answer a question that Herb had asked earlier. What about the South Bay area? I'm assuming you were asking what's happening, the pricing and the inventory. I think I know there was some listings, and Sumit, you can reach out or mention on that. I think South Bay is the same as Orange County, where homes are selling. Of course, South Bay prices are higher, but I think it's very active. I think overall, Southern California overall is very active, including the Inland Empire, South Bay, Los Angeles. Of course, Los Angeles is a whole new market because of the fires, so I won't go there.
Yeah.
But as far as Orange County, South Bay, which is pretty close to Orange County, San Diego, Riverside, homes are selling. If they're priced right,
Yeah.
if they're marketed right, they're selling, maybe not in the first 2 3 weeks, but the average days on the market has gone up, but they are selling.
I want to validate that. Santa Barbara down to San Diego, if the home is priced right, or if it's priced a little bit under than what the average home is in that area, the seller will get offers.
Right,
Then it's a question of counters and counter offering, and coming in an agreement between both parties. But
right, right,
I don't know too many homes that are sitting for a very long time, unless, all due respect, there's just something very wrong with that property
right,
altogether.
right, right. Yeah.
I mean, there are investors who are buying properties cash,
Oh,
cash.
plenty. Yeah,
Plenty
20,
of
30.
investors buying properties all cash.
Yeah, even
Um,
now. Yeah.
Yeah, I do my best on the weekends, Saturdays, to go to open houses. It's a camaraderie I have with my real estate partners, just to go say hi, hello, help them out wherever I can.
Yeah.
And one of the agents told me she started her open house at 11. She was already there, like, not quarter till 10 or so. There was already a guy outside. Well, I shouldn't say a guy. There was already an investor outside asking, "Hey, close that door up, and I'll give you this much cash for it now."
Oh man. Yeah.
I'm like, real. I'm like, listen. I was listening to this. I go, "Are you serious?" Yeah, I
Yeah.
mean, it was a low ball offer, but he was serious. He was serious.
That's
How
sweet.
much? Let's
That's,
just strike a deal right now, and let's just close this up.
yeah. Yeah, the house I closed today, it was on the market. I showed it 2 months ago. It was listed for 1.2 in Buena Park. and we decided it was too expensive. You know, it was too high based on comps. So I said, let's wait, because remember, this is an investor. He wants to rent it out, and it did not make sense. It did not break even. 30 days later, the listing price dropped. It did not sell. My buyer calls me up, hey, Mike, price dropped. Let's go take a look at it. So we went to see it again. We made an offer. So they dropped the price from 1.2 to 1.1, so $100,000 off. We offered them $30,000 less. There were multiple offers. So we offered them $30,000 less, and we got the price, even though it was a multiple offer, with 40% down payment. Then we did the inspection. There was a lot of stuff wrong with the house. We asked for $15,000. They gave it to us, which was good. And we closed today. But guess what? The buyer called me up last week and said, I want to pay cash, because he's doing a 1031 exchange. He said, I want to use that money and not pay cash and not pay the 7%.
Okay.
And we paid cash and closed a week earlier. We just closed today and gave him the keys just before I came here.
Awesome.
So investors,
Congrats.
my point was, there are cash buyers out there.
Yeah.
And a lot of the cash buyers, investors, what they're doing is they have a commercial property, or if they have 2 or 3. People ask me all the time, where are these people getting cash? Well, they have rental property. They bought 10 years ago, and they're refinancing, pulling the money out, buying it, and they'll refinance that when the rates drop, and they're being smart. They are making money on paper. Buy all cash, don't pay 7%. When the rates drop, and if they drop, at 5.5%, they'll refinance, pull the money out, and buy another property. They get appreciation, they get depreciation, they get interest rate tax write-off. These guys know what they're doing. Richest people in the world make money on real estate.
That's right.
It's on paper, not 9 to 5. And I'm just giving a heads up: buy real estate.
In
the
long term, real estate.
For the long term.
In the long term, you'll be fine in real estate.
Yeah, if you buy a house today and say, you know what, I'm going to buy a house today, and then 2 years move to Florida, don't buy that. Today, if I have a buyer, the first question I'm going to ask is, how long are you going to keep? Because I think after a couple of years, prices will drop. We don't know how long they'll drop, but they will drop. We don't know how long, but it's good to say that plan on staying for 7 to 10 years at least.
Yep. Agreed.
Unless something really tragic happens, where the tariff and the China and the trade war goes on. That's a whole new.
What we can control. What we can't control.
Yeah.
Just have a pint of beer over it.
Exactly. Right. So here's a question. If you want to make a comment, if you're sitting on a sub 4% mortgage, right? What would it take for you to sell right now? Let us know in the chat, or make a comment. Let us know why you're selling, why you would not sell. And would you sell at 4%, buy 7%, and why not? So let us know in the comments. With that, I think Sumir will call it a day.
Yep.
Thanks for coming on. If you're watching and talk to a lender, Sumir's information will be in the description. So call him. He'll be great to talk to you. You don't have to go get a loan for him. He'll answer your questions no matter where you are.
Consultation.
Free consultation. I've known him for 7 years, or more than 7 years. A lot of my clients use him. And also, if you want to talk to a local realtor in your area, seeing what's happening in the market, what are the new trends, let me know, and I can refer you to the top 3% of all the agents nationwide. I have contacts with them. I network with them, and I can refer you to those. So let me know if you want to talk to them. I'll refer you. Thanks for watching. We'll be back again next week at 5:30, Home Service Central, and I'm Mike Patel. Thanks, Sumir.
Thank you, and thanks for having me.
Okay, bye-bye.
Bye-bye.